YouTube, it's Tracy from Entrepreneur Girl, and today is Thursday, so we are doing a video, and today's video is going to be on stock trading. So this is video number 2 in our stock trading playlist. If you missed number 1, I will put a link below, but also you could just check out all the playlist on the Entrepreneur Girl channel and kind of watch all the videos that you like or that pertain to whatever you're doing. So last video, we talked about kind of a general overview, like what is the stock market, some key terms that I thought you should know, and sites that can get you started. So what we're going to be doing today now is kind of getting you geared up so that you can get this running start. So we're going to be focusing on the business aspects, the equipment, what do we need to get started, and go ahead and make our account. So you actually have homework today too. I have my notes, so I'm all ready to share a lot of information with you. Okay, so here's our little game plan, and that's what we're covering today because we want to get off to a running start and we need to set up our stock trading like a business, like the business that it is. And when we do that, it's really important that we map out kind of our game plan, and it's especially important that we write it down because science, study after study after study shows that people that actually write down their plans are more successful at completing them. Even compared to people that have goals, kind of figured out in their heads, they still don't achieve them as much as people that take a moment just to kind of write them down. So we're going to do that. We want to kick off with the best start that we can, and we are going to write out our plan. So with our plan, there are 6 things that we are going to be taking into consideration for today's video, and that is time, money, equipment, accounts, portfolio, and personality. And for time, of course, we're talking about how much time can you invest in this? Is it going to be full-time or part-time? Money, how much money do you have to invest? And of course, size does matter. I've been getting a couple questions about that already, about how much does it take to invest. And I can't tell you how much to invest. I can tell you that you should only invest the amount that you're comfortable losing, because as beginners, we're going to have to push through this learning curve, and we're going to take some hits, we're going to take some losses, we're going to make some mistakes potentially. So you need to kind of know that going in, and don't put, really important money into this account that you're going to be really upset if you lose. I mean, we hope not to, but that's kind of the expectation because we are beginners, that we don't want to put, grandma's whatever special money in there. So obviously this is going to be as much as you can afford to put in there, because the more money that you have to start off with, the better able you are to grow your accounts and to purchase, some stocks, but not so much that you're going to be really upset if you lose it. Okay, so now equipment. Equipment basics is going to be office space. You need some kind of quiet area that you can work in. TV, because you're going to want, CNBC and the news and everything on, so you can be kind of paying attention. I found that having at least one very large extra monitor helps, because when you're trying to look at bar graphs and stuff later on, it's really hard to do that on a small laptop screen. It's just hard on your eyes. So if you can have an extra large monitor, it makes it easier to see. But I found that having one monitor, and I was trying to do split screens and everything, it just wasn't enough, because you want to be looking at the stock information, you want to be watching it real time, and you just can't do that all on one screen. A computer, obviously. I would invest in a big surge protector, because there's nothing worse than your power going out in the middle of a trade. And high-speed internet, because it's real time and things happen very quickly. It's a very fast-paced environment. If you're on some dinosaur internet, you're going to run into a lot of problems, like with missing the amount that you wanted to go in at. Also, you need to have some kind of internet backup. Like if your internet does go out and it's urgent that you get back on, what's your secondary source? Like I have a smartphone from Comcast, and I can just use it use my hotspot on my phone, and I'm hooked it back up to the internet. So whether you get a little card for your computer or however, a backup source would be nice. All right, so now we're going into accounts, which we're going to talk about more in just a second. But we're going to go ahead and set up our account because that's the step number one, and that's kind of our homework that we're going to be working on until next video, is getting our banking accounts, if you want like a separate business account, and getting our trade accounts and getting those linked up so we're all set to start trading. And then the next thing is portfolio. I've been reading, and it says that you should subtract your age from 100. You are 51, then that's going to equal 49. And what they say is that 51% of your portfolio should be in very low risk, or this number, your age, would be in very low risk investments like bonds, annuities, money market, stuff like that. And then this number would be in more high risk investments, you know, where a lot of the stocks that we're going to be talking about, you know, like tech stocks and stuff, that would be this number. And so that's just kind of a rule of thumb for your portfolio weight. All right, now personality. This is really important because if you don't know this going in, it can kind of set you up for failure. And I don't want you to be set up for failure, but some people are naturally don't like to take on any risk. For me personally, I'm pretty good at taking risk. So I find that, you know, with this and with other business pursuits, I have a tolerance for high risk. And that's good to know because one, I know that I have a tendency to go for it, which can be great, but there's also a flip side of that, is that I have a tendency to go for it. So I kind of need to self-monitor myself. Whereas if you have a low risk tolerance, you might be happier and a safer, you know, like the dividend stocks. You know, you might not go into some high volatile stock because you're going to be really uncomfortable and it's going to make you miserable and you're going to be sweating it out the whole time. And it's just going to be an unpleasant experience. So knowing kind of where you are and how you feel can kind of help you make big decisions moving forward from here, because you're going to have to kind of make those decisions and how you're going to set up your portfolio, and your personality plays a big part in that. I did my homework too. You'd be so proud of me. And I decided that for myself, I'm going to be part-time. I have, you know, entrepreneur girl e-commerce business, and that's really my primary focus right now. I really want, for me, I would like stock trading as an investment tool. So I'm kind of looking more long-term and not quite, you know, like the day trading short-term thing. I'm looking at it as a place to put a percentage of my profits into and then have it grow from there. So that's kind of where I stand with part-time or full-time. I decided to start with $1,000. I felt that that was a lot. It's a little bit more than I was comfortable starting, but after doing research, I found that I don't think if I invest, you know, just a couple of $100s, that it's really going to do what I want it to do. So I think I'm going to start by moving over $1,000 into the account and see how that goes. As far as my equipment and my space goes, I'm pretty good with that because I already had everything because of my other business. So I don't need to buy anything. I already have the secondary monitors and my laptop and everything that I need. So that is good. I'm starting off well. And then as far as my portfolio goes, I don't want to play it safe. I don't want to do like bonds and all of that. As you saw in my first video, that's not the return that I want. It's kind of not worth it to me to be doing all of this and taking on, you know, any amount of risk for the return, because I have better return in e-commerce. So like, why would I do that? So I'm more excited to do, you know, the stocks. And with that, I decided not to take on the very high risk volatile ones, but I'm going to go in at a moderate risk. So that is what I've determined for myself, doing my homework through that little sheet that I just showed you. And now we're going to talk about accounts. Okay, so I was looking up ETrade because that is the one that I decided to take, but I wanted to pause for a second and show you that when you start looking up one, they kind of all have a tendency to come up, and you can just kind of search and look through them and make your own decisions. I'm going to show you a few of the most popular ones, and that way I don't want you to take my word for it. I want you to choose what's best for you. Okay. So the first one we're going to be looking at here is Fidelity Investments. This is fidelity.com, and I'm just going to kind of quick show you, just going to scroll down and show you. Most of them you can kind of watch a little video or read about why you should choose them, what they offer. So I would look at least the homepage of all the ones that I'm showing you and see, what kind of education. I like the education. So, kind of look at, what's the key high points that they show you. Okay, and then we have ETrade and new limited time offers. These are all things that you're gonna be paying attention to. This is kind of nice. ETrade, so you can kind of look through that. Why should you choose them? Okay, the next one is Charles Schwab. Now, this is what I used to have, and I was fine with Charles Schwab last time around. I didn't have any problems with them. I just kind of wanted to try something new this time and see, be able to compare them and maybe have access to other education that I didn't have before. Here's Scottrade, and again, they are one of the most popular ones, and you can look through their online trading and what they offer. And then this is ETrade, and this is the one I've decided to go with. But like I said, make your own decisions. Everything I tell you in these videos is just kind of like my journey. So I am not a professional by any stretch of imagination, and I don't want you to just do what I do. Everything we talk about is just really for you to kind of take it into consideration and then educate yourself and go from there. So this is ETrade, and our homework this week is to go ahead and open an account. As you get into this, you'll see that you can link accounts up. So if you have a personal checking account and you're putting your income in there and you want to take 10% of your income and move it over to your trading account, you can do that with a click of the button, much like online banking if you're familiar with that. So then it just transfers the funds to your trading account, and then it's there, and then you can make trades with it. You can also set it up where you have a business account. So say you don't want this trading activity to be, anything with your personal accounts. You can set up a business checking account or savings account or whatever at your local bank, and then you can link it to your trading account. A lot of trading places will also have it where you can have just a regular account with them too. So you can set it up however you want, but that is your homework. That is what I'm going to be working on, and that's what I'm going to be doing through ETrade. And you can see here that I can just click open an account, and here it talks about the types of accounts. You can learn about the different types here, but I know that I'm going to want a brokerage account. You can see here that it's telling me that it takes an initial deposit of $500. So that is one thing you do want to be mindful of, is these different accounts might have different minimums for you. Okay, please select an account type. I'm going to be just an individual, and I am new to ETrade. And then I'm going to fill out my information here, and then I'm going to click continue. Okay, and we're processing. And now I'm going to have to enter in my personal information, my bank accounts and such. So I'm going to go ahead and pause the video and do this, and I hope you are going to do this too. Okay, so there's three things that I think you might need to know about, so I want you to be prepared for those. One is the commissions. You're going to be a necessary part of this business expense that we have, because by law, your trades have to go through a registered broker. So these ETrade and Charles Schwab and these firms that we're using, they have brokers employed with them, and these are the same brokers that are there if you have a question, and they can be really helpful to you. But when you place a trade on the website, you're actually going to pay a little bit of a commission. And that's normal and it's to be expected, so don't be alarmed by that. And when you're doing that, just know that commission rates can vary. So when you're exploring which site to use, you might want to explore the commissions. Another term that you might hear is slippage. And slippage really just means that when you put in your market order to buy or to sell, and your order gets filled at a different price point than you had set that you wanted. It'd be higher if you're buying or lower if you're selling. But bottom line is, in order to prevent that from happening, is issue limit orders. So that is what I'm going to be doing moving forward. The third thing I think you might need to know at this point is what's called margin accounts. Broker may or may not ask you if you want a margin account. So if you open your account with $1,000, then your broker will match that with $1,000, but it's a loan. So now you have $2,000 to play with, but before you get too excited, be like, yay! You know, you have to realize that it is a loan. First, loans come with interest, and so it could be there in case you needed it, but you're not paying on it if you haven't used it. So it seems like it's low. It seems like, you know, it could be a good source of, you know, trading income for you. And I wanted you to know that it's there in case they ask you about it or in case you see it when you're reading about it. But you have to remember that it is a loan. And I don't know how you feel about that, you know, and how you feel about interest rates, but you just want to get yourself in any trouble. So just be cautious moving forward with that. Okay, so let's take a second and talk about expectations, and more specifically, keeping them realistic. Okay, so for the short term, what should our expectation be as we're, you know, journeying this stock trading thing together? Well, from everything that I've read, it seems like the expectation should be that it's going to take you a year, at least, minimally, to be able to make consistent profit utilizing the stock market. That is kind of how we're gauging success. We're not gauging it where everything that I invest in turns to gold. We're not gauging it where, oh man, you know, I'm going to double my money next week. We're not gauging it with any of those because those are unrealistic. And then we're going to be really disappointed and feel not confident in our abilities. So success for us and for most people would be considered where we are consistently able to pull money, you know, to turn a profit out of the stock market. Our short-term expectation now is that we're not there yet. You know, we're beginners, you and I, and we're going to be pushing through this learning curve. It's going to be uncomfortable. It's going to feel scary. It's going to be, you know, nerve-wracking because when you put your own money out there, and I remember when I first I took all my money and then I, you know, divvied them up into all these trades that I had researched, and I was like, oh my gosh, like I felt hot. I think I had heart palpitations. It was not a comfortable experience. And I felt that way for like a week. Hopefully, I'm hoping that that won't happen again because, you know, I've already done that. But I just want to let you know that it can be really scary because it's a learning curve. Like you haven't done this yet and you're learning how to do it. And when you first put real money out there, it's all fun to talk about until money's actually on the line. And then you're thinking, what if? What if I lose it? What if I make a stupid decision? What if I invest in the wrong thing? And our expectation is not to be there. We don't plan on being consistent. We don't plan on pulling big profits. Right now, we're planning on learning the process. We're planning on, you know, not losing our butts. I don't want you to be, you know, that greed and fear that we talked about in the first video. I don't want you to be greedy or be, you know, have that as your expectation. So you're kind of chasing it around and then losing. So we're going to aim for, you know, $10 profits instead of $200 losses. We're going to aim for 50% of our holdings being winners. So we're not losing our butt. We're actually maintaining, you know, maybe making a little profit, and we're learning and we're gaining confidence. That's our short-term goal now. And then we want to keep learning and keep growing until we get where we are consistently profitable by using the stock market. And then, you know, we will always be paying ourselves that 10% right off the top and putting it in a separate safe account so that we can just kind of watch it grow. And then we can use that money to trade. But more importantly, I kind of like you to have a goal in mind, like an Alaskan cruise, or maybe a mountain retreat vacation, something that you've really wanted, that you really want to work towards, and then we're going to name that account, that 10% account for that. So I think it's motivational, and when it gets hard, you can really hang on to that and really kind of push you forward. Okay, so let's review. The first thing is that trading is a business just like any other, and we're going to begin our business by writing a plan. Okay, second thing is make sure that your trading money is actually money that you can afford to lose. We are going to get our office and equipment in line. And this is going to be a quiet, well-lit space, television, up-to-date PC, large screen monitor, high-speed internet connection, a backup connection, surge protectors. If you want to get newspaper, magazine subscriptions, that would be all beneficial stuff that you'll do. Number 4, we're going to open our trading account. What you're looking for when you're picking yours is you want, access to some real-time quotes. You want a website that is accessible, easy to navigate. You want it to be well organized, kind of user-friendly. You want so that way you can understand the order entry screen. You want a quick confirmation system. You want to be able to see your account balances and your portfolio updates. You just want it to be reliable, and you want it to be able to teach you. So these are all things that you're going to be looking for when you evaluate this account. We talked about slippage, and this occurs when you put in a buy-sell market order and it gets filled at a different price than the quote at the moment. Higher if you're buying or lower if you're selling. And we talked about how we're going to avoid that. And then we talked about margin accounts and what they are, and that will be your decision if you choose to do it or not. But it means that your broker matches your deposit with a loan of equal value. And we talked about our goals, and our short-term goals. We're going to, conserve our capital. We're going to make a certain percentage of our trades green, positive. They're going to be successful, and we're going to trade well. We're not going to be greedy. We're not going to chase some unrealistic expectation around. We're going to be confident, and we're going to move forward in small increments. And we talked about our long-term goal, of course, is to be consistently taking profits out of the markets. We're going to attain that big picture goal that we've always wanted, like the cruise to Alaska and that separate account that we've talked about. Well, guys, we did it. That is video number 2. I hope you got some information out of it. I hope there was some value for you. If there was, please thumbs up below and go ahead and write in the comments, where you are, what you're doing. Maybe once you've set up your account, which place you decided to set up your account, the dollar amount that you decided to set up your account with. These are all things I think that we would be curious about. Other people kind of wanting to know what other people are doing, and we can kind of share that information and, chat back and forth in the comments below. So I will also put a link, hopefully I won't forget, I will put a link to video number 1, so you can just click on it and you won't have to go searching for it if you missed it and are just kind of following us now. Thanks again for being here. I appreciate all of you, and I will see you next Tuesday for Tracy's Tuesday tip video. Talk to you then. Bye.